Why do you need a personal home loan shopper? Hi, my name is Randy Flood and I'm a certified mortgage coach. And I'm going to help answer this question by looking at three very important facts that most people do not know. First of all, most consumers focus on rates. Secondly, I hate to tell you this, I can't give you the lowest rate because we all have the same rates. And then finally, rates constantly change. So why do consumers focus on rates? First of all, lenders stress the lowest rates. That's the only way they try to differentiate themselves. And by posting a really, really low rate that no one else is offering, it's going to make their phone ring, which they're going to be able to do the good old bait and switch. So that's the only way that they can differentiate themselves. Secondly, they have conditioned us as consumers to focus on the rates and only ask about the rates. Now, why do they do that? Very simple. It's easier and faster for them to take minimally trained individuals to answer your phone and say, here's the rate. It's also cheaper because these people are many times paid at minimum wage because they're unskilled. They don't know anything about the mortgage industry. Thirdly, and most importantly for the lenders, they make so much more money because they don't want you to know about the different options. They don't want you to know about the costs, and they certainly don't want for you to be asking about the benefits. And usually the only benefits that are there are usually for the lender, not you as a consumer. And as consumers, why do we focus on the rate? Well, it doesn't take a rocket scientist to call a lender and say, what's your rate? It's very simple. It's fast. But instead of doing that, we should be looking at what the options, the terms of the loan, the costs, the short and long-term benefits, and also what the APR or annual percentage rate is and not the rate. And I'm going to give you an example. Here's an advertisement that I received in the mail the other day, and it's actually from one of the investors or lenders that I get rate sheets for on a daily basis. As you can see, it's addressed to me. I've been selected. In other words, they're trying to make me feel like I'm special to actually receive a rate of 3.325% at a low APR of 7.5%. It's so small you can barely read it. By law, it needs to be much larger. And of course, there's no out-of-pocket costs, and it can save me thousands of dollars. And I can skip up to 2 months of mortgage payments. That sounds great, to the average consumer. However, what's important here is that APR. That is your annual percentage rate, and this allows us to compare apples to apples. Do not focus on that 3.5% because in this scenario, that is an adjustable rate mortgage. At the time of this advertisement, I can actually get a 30-year fixed rate mortgage at 4.75%. The APR would be below 5%. I would never need to refinance ever, thus saving me a ton of money, saving me costs, not having to go through the hassle again, and preserving my equity. And that's the reason you need to be an informed consumer. And oh, by the way, in order to get up to that 7.5% APR, I would have had to pay 3 to 4 discount points and a bunch of junk fees. And that is not in the interest of anyone. And that is how come so much of our industry has been given a black eye. The second important fact is why we have the same rates. First of all, the rates are determined, from the secondary mortgage market, and we get the rates and the pricing from the same place. So we're paid the same. So the rate sheets are virtually the same. And that's the reason it's very easy to tell if someone is quoting a rate that cannot be delivered. And, if they are quoting a rate like that, it's usually for the bait and switch, and they're counting for you to stay with them even after they quote you a low rate and take you to a higher rate. I want to show this chart because rates do change constantly. And this is from 71 to 2009, although you can take it out to 2010. Several things. As you can see in the early 1980s, interest rates got up to 18%. In fact, my wife and I camped out at a title company in the early 80s trying to get special bond money at 14%. We didn't get it. They ran out of it. And I want to focus right here because this line here represents 5%. Take a look at our history. We have been above that line until just recently. And right now we're currently at like 4.75%, which is unheard of, the lowest rates in over 50 years. I subscribe to a service called Rate Watch, and on my monitor throughout the entire day, I'm able to see exactly what's happening in the bond market and the mortgage-backed securities. And, in the morning I recommended that, hey, I believe rates are actually going to fall. Anytime where you see green, that is good. When you see red, that is bad. And like in this scenario, I was predicting that the rates were actually, or the bond prices were going to get worse, which meant that rates would also get worse. At the end of the day, as you can see, the market was actually closed. We went past the line that I was saying that we would, and I'm able to go on and track it and also help predict where interest rates are going. And what does this really mean to you? For example, I locked here at 4.75%. The individuals or loan officers that did not monitor the rates and locked down here got a interest rate of 5% or higher for their clients. Now, what's the difference in cost to you at 4.75 versus 5%? If you just take a look at the actual cost itself, I would be able to save you over $1,500 on your closing costs. And that has nothing to do with your lower monthly payment and your long-term savings, which would be significant. So that's the importance of knowing when to lock versus not knowing what the market is doing. And I also just want to show you, we get emails throughout the entire day of when rates are changing. And this is an email that I received, and it was actually the second price change, and is for the better. So what ended up happening is they improved the pricing by 0.35%, and on a $200,000 loan, that would save you over $700. So in other words, if we were able to get another 1% improvement, by monitoring the rates, that would equal to over $2,000. And once again, that's just on your closing costs that we could have saved you by monitoring it. And once again, you would have a much lower monthly payment and also save a ton of money over the long run. So in summary, we all have the same low rates, so don't compare your lender based on the rate solely. The rates are volatile. You need to have someone that's monitoring the rates, such as myself, all the time. And also decide on the best advisors. Someone that's going to show you what your options are, that's going to be there for the support. But don't focus solely on the rate. And that's the reason you need and deserve a personal home loan shopper for your biggest asset. I hope you found this information valuable. If you have any questions whatsoever, you can call me at any time at 303-840-7470. And once again, I am a certified mortgage coach, less than 200 in the entire country. And once again, I only want the best for you.